One of the first rules in trading, especially volatile stocks, is stick to your stop and keep your losses small. But today I'm going to talk about a technique that's going to save you from maybe getting stopped out on a trade that ultimately ends up working. Hey everyone, Lead Trading with StocksToTrade, Tim Bohen here. Be sure to like, subscribe, share with your friends, and ring that bell to be notified as soon as we drop a new video. We're posting a ton of stuff now, how-to videos, podcasts, long form, short form, ton of live videos. So ring that bell to be notified as soon as we go live. Also, if you're looking to take your trading to the next level, I think the Steady Trade team is one of the very best ways to do that. There's so much to learn. Today we're going to be talking about order types. There's chart patterns, there's news, there's SEC filings, there's a million things, maybe more than a million things to learn. And I think the best way to do that is in twice daily live and interactive webinars in the Steady Trade team. So check it out, take your trading to the next level, and shortcut your path to success. All right, today we're going to be talking about stop loss orders, how to use them, some tips and tricks to maximize them, and to not, one of the biggest things that happens in volatile stocks, and you've probably been there, I've been there more times than I care to admit, is you get stopped out because you know that you can't overstay in these volatile stocks. You have to keep your losses small, all those rules we talk about. But it can be frustrating when you get stopped out by a penny or 10 cents a share or 15 cents a share. Then the stock reverses and ultimately works. Frustrating, annoying. I've been there. And it's going to happen. It'll always continue to happen. These situations will happen. But I want to talk about what to avoid and how to, maximize your potential in these situations. So, number one, what I see a lot of people doing is stopping out at what we call obvious points, okay? And an obvious point would be when the stock goes red on the day, okay? You can't, if you stop out exactly at green to red or exactly at red to green, and then the stock ultimately reverses. And I've got an example on my screen that I'm going to go over a bunch of points on, WKHS. This has been one of the strongest electric vehicle plays out there. Let me jump back to another chart. You'll see, WKHS. Look at this beautiful breakout at $4. And here today we're at almost 28. So this is an example of, let's say you got out or you got stopped out for 10 or 15 cents a share back in June, and then the stock proceeds to go all the way up to as high as 20 a month later. Could be frustrating. So that's what I want to talk about, how to avoid those levels and avoiding those obvious points. So several areas that we're going to talk about. And again, number one, like I mentioned, is that red to green line. You'll see WKHS had a pretty nice day yesterday, trended up, was a little bit sideways. And let's say you bought it into the close right here, and then you get stopped out on that red move right there. Then the stock goes green to red after the market open, and here it is, $2 a share higher. So, especially if you're overnighting these stocks, you'll notice this will happen. The darker gray area is after hours. The lighter gray area is pre-market. The biggest thing I want you to avoid and be very careful is stopping out on those red moves, especially when you've got volume like this. You can see, yes, the stock went red at 7 a.m., but almost imperceptible volume. Look at the volume compared to after the market open. Basically, you're talking hundreds of shares, maybe 1,000 shares or something like that. So try and avoid those areas. Now, remember, you got to be properly position size. As I talk, every point I make in this video, I'm never, ever, ever going to tell you to increase your loss. It's not what we're talking about here. When you calculate your entries and exits, you got to think about these obvious points. And if you bought at 25.80 and 25.20 was your max point, pain point, or 25, well, you got to take that stop. Because if you've got 1,000 shares, 2,000 shares, and you're down $1 a share, that's a bad loss. So take that into consideration. So if you're buying at 25.80 and the stock closes at 25.35, you got to realize that to be properly position sized and don't have too much size, because one of the best ways, you want to know the best way to get consistently stopped out and consistently lose in volatile stocks? Here's a tip for you. The very, very, very best way is to have too much size in volatile stocks, because you'll get stopped and then the stock will ultimately work just like WKHS did. So avoid the low market or the low volume pre-market or after hours areas. That's rule number one, especially on red to greens, because we know that's a panic point. The other area I want to talk about is try and avoid whole dollar, half dollars, okay? When we're talking about whole dollar, half dollars, we're talking about 25, we're talking about 25.50, we're talking about 26. Stocks tend to go to those areas as what we call magnets, okay? So you can see that this morning and even yesterday, briefly, just for a few seconds, this stock broke 25, but ultimately held that whole dollar, half dollar support area. So if you stopped out on these quick wicks, just these quick little 10 cent below or 15 cent below 25 area, you're now getting stopped out on a stock that ultimately worked, because of the fact that a lot of traders set their risk level at whole dollar, half dollar. So what I would do is I try and avoid that. Don't put a stop in at 25. Put your stop in at 24.75. Or again, if you're talking 25.50, don't put a stop at 25.50. Put it at 25.25. Put it at 25.05 or something like that. And I know it sounds corny, but you will see this over and over again when these stocks, especially when they hold that whole dollar resistance, they will support, I should say, they will quickly reverse. I mean, geez, look at that candle right there. I mean, that's a heck of a candle when this thing holds 25 and breaks out. So whole dollar, half dollars, avoid those areas. Those are, again, areas that they're going to key in on. So I call it tickling orders. Do a stop at 24.99 or 24.96, or avoid whole dollar, half dollars, avoid red to green, avoid VWAP. Again, something like, just using WKHS as an example, twice this morning after it broke out, twice it broke VWAP. Then what's it do? Reclaims VWAP and rips again. So if you're stopping out exactly at VWAP, you're going to see that. So all of the key indicators, which I do a lot of videos on this, we talk about whole dollar, half dollars, previous day's close, red to green, green to red, VWAP, 52-week high, 52-week low, previous day's high, previous day's lows. Again, 25 was the previous day's low as well on WKHS. So avoid the obvious areas for stops. That ultimately is the biggest thing I want to talk about, and the biggest thing I wanted you to learn from this video, because you'll see it over and over again, especially on low volume moves. Now, listen, if WKHS crashes, goes red, and you've got a volume candle like this or a volume candle like that, different scenario. What that tells you is there's probably news, there's probably an SEC filing, something bad happened, okay? So when you get these high volume moves to those areas, you might want to move your stop up. You don't necessarily want to stick to that original area. But the biggest thing I can give with WKHS is just this, that imperceptible volume. And that's one of the best ways to get stopped out on a stock that ultimately works, and one of the best ways to minimize your consistency, maximize your frustration. And listen, we want to build our capital. We want to build our account. We want to make profits. We want to grow our account. We want to get over the PDT. We want to hit our goals. We want to pay for a vacation, all these things. But don't discount the value of your mental capital as well, because if you keep consistently getting stopped out because you're fixating on these simple areas that everyone fixates on, that's going to drain your energy level. It's going to frustrate you. Now you're going to press, you're going to push, you're probably going to overtrade, you're probably going to revenge trade, which are a couple of the worst possible things you can do, and things are just going to continue to snowball. And that snowball rolling downhill in this area, or in this particular instance, is not a good thing. It's just that mental capital. I think it's something that people don't talk about that much, that energy that positivity. I mean, listen, it's hard to be positive when you've gotten stopped out by 5 cents a share 4 days in a row. But if you start sizing down, increasing your stop, focusing on 3 to 1 or even greater risk to reward, and avoiding these levels, I think you can lower your frustration, maximize your consistency, and that's how you become consistently profitable in this game. All right, everyone. Thank you. Let me know. I'm curious. Drop me a comment. Did you, before seeing this video, would you set a stop at whole dollar, half dollars, red to green, at VWAP? Were you focusing on those areas that I told you to avoid? So let me know in a comment. And as always, check out the StocksToTrade team. This is, I move pretty fast in these videos, but the great thing about the StocksToTrade team is we have 45-minute, 1-hour-long webinars. We really get in the nitty-gritty. You can ask questions. I answer every single question live, real time, every single day. I don't know anybody, maybe someone does, but I don't know anybody that does that every single day. I'm always on time. I'm always high energy. I'm always ready to help you learn, grow, and achieve the ultimate goal of being a consistently profitable trader. StocksToTrade team, the best way to do that. Live, interactive, every day. All right. Have a great day, everyone. Be sure to check out the archive, too. If I mention VWAPs and green to reds and all these things, we've got hundreds, maybe thousands of videos. I can't keep track anymore, breaking down these terms as well. So go through the archive, check that out, and we'll see you on the next video.